Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition on Business Today Television. Our focus is on the company Zensar Technologies, the engineering and technology solutions company. The company has reported its first quarterly earnings. The revenue from operations have seen a 4.7% growth on a quarter-on-quarter basis to 1288 crores. And we have seen, however, an 8.8% decrease in the consolidated net profit to 157.9 crores in Q1. On a year-on-year basis, the net profit has slipped about 9.9%. We've also seen some pressure on the EBITDA. That's down 3.4% sequentially. And when we look at the margins, that has declined to 15.2% in Q1 against 16.5% earlier. Now, to discuss and detail for us what worked in this quarter and what didn't and what's the outlook going forward, I'm now joined by the top management of the company. Mr. Manish Tandon joins in. He's the Managing Director and the CEO of Zensar Technologies. Warm welcome to you, sir. Thank you so much for taking the time out and speaking to us with regards to your own results. To tell us at the outset, the pressure on the bottom line as well as on the margins, what is that on account of, sir?
On the bottom line, as I have been mentioning in the analyst and earnings calls also, one of our actual adjusted margin is 16.3%, not 15.2%.
Okay.
We had a client bankruptcy, and normally, you earn back. You get at least part of the receivables. With prudence, we have taken the entire provision. We have created a provision for $1.7 million, which
Okay.
translates to 1.1% of margins.
Okay.
And as I said, we want to make sure that our balance sheet and P&L is solid, and we disclose everything to customers, to our investors. So we have taken that hit, and we have been transparent. But the actual margin is 16.3% if you take out that one-time item.
Okay. So, will this
And
bankruptcy of your...
Sakshi,
Yeah.
too many people are focusing on margin. I think the people are. I think I would like to refocus on the top line growth that we have seen. I believe that it is on the higher side of whatever has been reported by our peers in the industry. So that is something that I am terribly proud of what my team has achieved. And second is that this is the second quarter in a row that all our verticals have shown sequential growth. So those are two very positive signs.
Two positive signs. On the top line, I just wanted to understand, has this bankruptcy of your client impacted margins as well as top line, or is it only limited to the margins and the bottom line?
Only to the bottom line,
Okay.
not the top line. This was not a very large client, fortunately. And also, this was a Chapter 11 bankruptcy, not a Chapter 7 bankruptcy,
Okay.
which means this Chapter 11 bankruptcy is more a reorganization, where they reorganize the asset and liability side of the company, and usually the company is back up again. Some of the top names of the industry have been through this route several times in their history.
So, any trickle down effect in Q2 do we expect, or is it done and dusted with Q1?
It is done and dusted.
Okay, okay, got that. So, sir, with that aspect in mind, what is the outlook that you have both on the top line as well as on the margin front for FY25 as a whole?
We have not changed the outlook for FY25 on either the top line or the bottom line. Top line we don't give. Bottom line we had committed to mid-teen margins, and we still retain our commitment of mid-teen margins.
Mid-teen margins. Okay, so that's something that we'll be looking forward to. But sir, again, staying with the margin picture, next quarter onwards, since you're saying that there will not be any impact and this quarter is done and dusted with this aspect, but what about the wage hikes? Will that have pressure on Q2? Because are you looking at
Yes,
the
yes.
wage hikes in Q2? Yeah, okay.
So first of all, again, we are what we have tried to achieve as a company and as a CEO is balanced growth. Unlike some of our peers, we have actually our salary hikes are on schedule. Actually, they
Okay.
are ahead of schedule. that this I am told that this is the first time that these have been done on first of before 1st of July. In addition, we have paid 100% average variable pay. Average is 100% variable pay to our employees. It has been our commitment that whatever benefits accrue to the top and bottom line, the employees should share those benefits, and we have shown that we have put our money where our mouth is. So again, very very good results for everyone, be it shareholders, be it employees, and of course, our clients are always first.
Okay, so I also wanted to understand one aspect with you. Just recently, we've seen the entire industry face the CrowdStrike incident that took down the entire globe with a lot of shock across industries that happened. What did that incident mean for industry players like you, the tech leading giant companies like you? Did it have concerns from your own clients at all in terms of how they're going to be funding their own projects with respect to some such incidences that have come into play?
Sakshi, that's a great question, and I think two things I want to mention. One is, again, I'm very terribly proud of the Zensar team. The way they have helped our clients recover from this CrowdStrike thing is amazing. In fact, my mailbox is inundated with client emails appreciating the work that our teams have done. More so, also, my flight got cancelled, and I was telling those guys that you should have, contracted with us. Your systems would not have gone down for so long, maybe. The second thing is what has happened previously when incidents like these happen is that suddenly there is a lot of attention on cybersecurity and disaster recovery, business continuity planning, and some of the capital projects funding gets diverted towards these issues. And
Okay.
I mean, usually the impact is not, it's very client specific and it's not too much. But given the scale of the crisis, I am being cautious, and I think it is going to have an impact on capital expenditures.
Okay. We'll keep an eye out on that as to how that aspect also plays out in the future, sir. And thanks for giving that insight to all our viewers. The other aspect is just very recently, before this quarterly announcement, you have also done an acquisition of Bridgeview to expand into biopharma and life sciences industry as well. Could you help us understand, by when this acquisition will be completed? By when do we see actual translation into the books? What is the kind of peak potential on the revenue front that this client will have for your healthcare segment?
Sure, I think I'm very excited about this acquisition. It's a great acquisition. As you know, we started our healthcare and life sciences practice in business 2 quarters back, and very proud to say that in both the quarters, it has grown sequentially in revenues. We were looking around to enhance our capabilities in this particular sector, and Bridgeview seemed like our match with Bridgeview seemed to be, match made in heaven, and we immediately consummated that match. For those of you who follow the sector, this is in the what is known as pharma commercial space, where Viva is a very big presence, and this company brings a lot of capabilities in the Viva CRM space. The marriage is consummated. So when we announced it was simultaneous signing and closure. In fact, we were very excited to welcome the Bridgeview team to the offices, and we had a great town hall just a couple of days back. They are very excited to join the Zensar family, and so are we in having them. As far as financials are concerned, mostly they are all in the filings. But I would like to just say that just to make sure that this will not be EPS or margin dilutive in the current year.
Right. Okay, we'll keep an eye out on that too. And lastly, sir, if you could just highlight for us, the way you expect FY25 to pan out in terms of the demand environment, both geographical, geography-wise as well as segment-wise for you. Where do you see pickup in demand happening? Because a lot of your larger industry peers have still appeared cautious as far as the macro environment is concerned. How are you really looking at it?
I don't see that anything has changed fundamentally from FY24. FY25 has remained the same from a market condition perspective. I do not believe that things are going to change materially till the US elections are over.
Okay.
And as you know, that itself has become a very interesting, interesting place to look
Do
at.
you see Mr. Trump
And
coming back?
I have no idea. I am not a politician, and I can't be a politician. I don't want to be a politician. I don't want to make predictions in politics because, if you have to gamble, politics is the last thing that you should be gambling on. So I have no clue, but I find the developments very interesting. And from an economic perspective, as I said, I don't see the situation on the ground changing materially till the US elections are done.
Okay, got that. Well, thank you so much, Mr. Tandon, for being with us on this very special edition and sharing all your insights from the quarterly earnings. I wish you all the best for the upcoming quarters and hope that things improve from here on as well going forward. Many thanks for being with us on this special conversation.
Thank you for having me, Sakshi.
All right, viewers, we'll wrap it up at that. The earnings conversation with Zensar Technologies. Of course, the pressure on the margins as well as on the bottom line explained with respect to bankruptcy of one client. But seems done and dusted. Overall, mid-teen margins is what the company is expecting for the rest of FY25. So we'll continue to keep an eye out on that. Many thanks for being with us on this edition.
Welcome to this session of Decoding Budget 2024-25, Mr. Kant. There's a host of questions that I have for you, but I want to begin with that one question that's being asked quite a bit. Why did the budget not choose to extend the performance-linked incentive scheme for boosting manufacturing and jobs to various other sectors?
Well, I think, Siddharth, to my mind, this is one of the most sensible things the finance minister has done, is to not spread PLI too thin. We've extended it to 14 sectors. We should see that these sectors deliver. And other than electronics manufacturing, 13 other sectors must deliver in a big way. Secondly, PLI is not the solution for all the challenges of manufacturing. The challenge is to make India very, very efficient as a manufacturing destination by improving on its land, logistics, labor, many other issues, by scrapping rules, regulation, procedures. PLI was an interim measure for a period of 5 years to create global champions. It's only meant for companies which are able to keep increasing their size of production and the scale of production year after year for 5 years. This is not a solution for all sectors, and I'm really glad that Finance Minister has not expanded it to other sectors.
Mr. Kant, does it mean that at some point of time in the future, the PLI will be withdrawn after the sectors in question have sort of stood on their own feet from a manufacturing point of view?
Yeah, the PLI was only